Alrighty, traders, let's get into today's market update and stock market. Nothing is going to stop the stock market from what I've been talking about for the last few months, right? And also the mining stocks. Mining stocks are getting a bit of a pullback right now, but that's actually a good thing, and I'm going to share with you why in this video. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so let's get straight into it right now. Oh, by the way guys, link below. If you want to get free access to my trading course. Over the last 17 years of me trading the market, I've put some amazing things that's really helped me have the breakthrough in my trading. And in the last 17 years, I've learned some amazing things and I've put them in this trading course and I'm giving you free access to it. So first thing in the description, go get that right now, or just go to Johns, Johns, freegift.com, johnsfreegift.com. Now, let's actually have a look at the stock market first. So the stock market, we can see that we had a bit of a down day yesterday, and I was thinking, okay, here we go. Now, maybe, just maybe, this is going to be the start of a bit of a pullback, right? Because we had through September, in October, we had that overall pullback, and then we had this moon shot straight to the upside. And the thing is this, is that, as you know, I've been long the SPY, or the S&P 500 stock market now for many months. So, and I still am long right now. And we can see, look what's happening through here, right? We had a bit of a down day. Now we're actually having a very nice update today. And there is so much pressure, so much liquidity on the sidelines that's coming into these markets that's continued to push these markets up. With interest rates still at zero, basically, with them still doing QE every single month. And then on top of all that, there's about $3.5 trillion of dry powder on the sidelines that's coming into the markets. There's only one way inflation markets are going to go, right? And well, there's no guarantees to that, right? But oh man, nose is itchy as hell today. So that's what we're seeing through there, right? So we're seeing a lot of that come into the markets, and we're seeing the markets actually have that big move up. So with the S&P 500, I have always had my first conservative target has always been 5,000 by the end of this year. And if you go back, on my YouTube channel, on my trailer video about 3-4 months ago, I did a video saying, okay, first target for the S&P 500 is 5,000. If we continue this trajectory, the ascent of what we're seeing right now in the S&P 500, and we get to 5,000 next month, which is November, right? 5,000, which is next month, which is November. And I just said the same thing twice. Just so you guys got it the first time. So we can see that there, right? And if we do get that, then my second target is 5,400. If we get there in November, then by the end of this year, I see it get into 5,400. After that, whoa, watch these interest rates start to rise up, and then it's all over Red Rover. Okay, so definitely not a long-term buy and hold, but interest rates are going to start to rise, and we need to be watching out for what the Fed does, because remember, the Fed is like this to the markets, right? The Fed's doing this. They're doing this, which is like shaving the QE off, right? Doing that thing, right? That thing that's like, this is the market, and then we give it, doing the QE every single month, and then obviously interest rates are still low, so the Fed's doing this. Then we have all this liquidity go right straight into the markets. That's what's happening right now. We're starting to get this, the melt up phase, to me, I believe, has begun. And so that's the reason why I've been in this market for quite some time. You guys know I've been calling that for quite some time. In fact, I called a new high back here when we made this higher low. If you guys remember, I called a higher low. That's like, here we go. And then the market did exactly where I thought it was going to go. Again, you guys can check it on YouTube, right? So everything the Fed's doing right now is doing this. right, is doing this to the market, which means well, actually it's doing this more, it's more doing this, right? It's just pushing it. But when they start to taper and they start to slowly raise interest rates, which is probably going to be next year, or this year they're going to start to taper, but maybe next year they start to raise interest rates, guess what they're doing? Instead of them doing this, they're doing this, right? They're just starting to easy, Tiger, easy. Now, the main reason why they're going to be raising interest rates is because of inflation, not because of the markets. Now, the markets would have just exploded by that time. Inflation would have continued to go on nuts, and then they would have come in. And guys, leave a comment below, but I honestly believe back in the 80s, the interest rates were like, I remember my dad paying in the 80s like 17% interest on a home loan. He lost his home because of it. Right, so I don't know, guys. I'm not saying we're going to go back there, but maybe we're going to go to a 10+% interest rates within this decade. Hey, leave a comment below. Let me know what you think. But if inflation gets too high, they're going to start to jack that up really quickly. And when that happens, when they start to get into the 3 and 4%, or anything over 2.5% of interest rates, is now a negative for the markets, okay? Because right now, the neutral rate, which is not a boost for the economy or a dampening for the economy, the neutral rate is 2.5, right? 2.5 basis points. That's without the QE every single month. So, take away the QE, you got 2.5 basis points. Once we start to get to 3 and 4 interest rates, whoa, imagine the debt. It's just going to be, oh my goodness, we're going to see one of the biggest crashes of our lifetime. But for now, whoa, ride this wave big time, okay? And also the Nasdaq look at the Nasdaq. The Nasdaq closed at a new high today. And I've always said that I have a 17,000 target for the Nasdaq, and I've had that for the whole year. And it looks like we're actually starting to get way up there. And now moving now into some of the mining stocks, we're actually getting a very slight pullback, which this is a really good thing. Let me explain the reasons why here. If I go and have a look at my 1 year chart, actually, let me just bring up a chart with no moving averages. I'll bring up the last 6 months here for a minute. Look at this here. So remember the trend is your friend until the end. Okay, so the end of the trend is, look at this here. Lower high, lower high, lower high. What's this here? It's a higher high. We also have a V bottom. So this is a V bottom situation. And then also what we have is we have a period down here where it's called a false breakout, bear trap, whatever you want to call it, right? In the market. And so we are seeing this right now. Okay, we are seeing this. And then the market's moved up. Now, what do we need in an upward trend? We need a higher low breaking past the previous highs. So if we get a little bit more of a pullback and then we hold and then we create some sort of a higher low here and then we start to do this breaking up, guess what? We've now gone from a downward trend to now starting an upward trend. And if we get this, then we should make our way back up to that, because you can see here, major support was around 30 to 31. That 30 level was a major support. So I'd say the next sort of major support is going to be around that $40 level. Yeah, somewhere around about that $40 level is going to be that area of resistance when looking at the markets there. So that's the thing I want to cover in today's markets, guys. The mining stocks look like they're starting to finally capture that bid. And as you know, I called this slingshot pattern back a few weeks ago. So the slingshot pattern's actually starting to work. I've been wanting to see this pullback, which is good, because this pullback is now starting to say, okay, instead of it just being an upward leg, we're now possibly starting an upward trend. And remember, the trend is your friend until the end. The end of the trend is possibly coming to an end on the downside, and a new trend is possibly starting on the upside. Hey traders, I'm giving away 100% free access to my brand new breakthrough full trading course. This is 8 videos over 10 hours of pure amazing and powerful strategies. This is my most powerful systems and strategies that I've used for the last 16 years, and I'm giving it away for free. So this is what I want you to do right now. I want you to go to johnsfreegift.com, or there should be a link around here somewhere, a button or in the description or somewhere in there. Click on that and you can go get free access to my brand new breakthrough trading course. So go to johnsfreegift.com right now. Go to that right now, guys. You can get full, complete, free membership access. Go do that right now.